Hi, everyone. Welcome to Tactical Tuesday. Another go around. Man, I don't know about you, but I can't wait for spring because I'm in Alberta, and where I'm in Alberta, we have a very foggy slash almost snowy day with rain, but we're almost turning to snow. So, welcome everyone. Let me know where you're from. What's going on? I have a friend out in the lake region in like the cottage country of Ontario. He says it's also gloomy. I have a friend that's in Calgary. She says it's also gloomy. So yeah, it's that's what we're looking at this week here, maybe. So welcome, guys. Man, we've got a lot going on these days in Ignited. Just a quick introduction to myself if you don't know who I am. So my name is Tiffany. I am a co-founder of Investor Life. We founded this company to help others to invest in their portfolios. So whether you want to buy 3 properties, 5 properties, 100 properties, doesn't really matter, although we don't recommend buying 100 properties. We will help you get there. If that means raising capital, if that means learning, how to manage it, whatever it might be, we will help you get there. We know how to help you get there because we ourselves crawled from the ground up, no silver spoon in our mouth, and figured it all out ourselves. So now we help others to do the same. So Ignited is our coaching group, and just some shout outs to you guys. There's a lot going on in Ignited right now. So this is just some of the success updates that we had this week. So Sarah and Josh out in Newfoundland, they are building or buying another, build up project. So they buy it, force some appreciation, add some units. So they just got another offer in Newfoundland. Angie and Andrew, they've got pre-approval for their pre-approval for their 6-plex build in Saskatoon. Corey just got her occupancy for Lux. Now, those of you who've been following along with her amazing videos, her 10-plex development that she did in Calgary. So time to lease up. So the work begins for sure. Let's see, George and Joe, you sold a couple of lots in your development. That's huge because, of course, as we know, development takes a while. So, getting the land ready. This has been a 3-year, 4-year project, and actually in the family for many years. So, that's huge. And then Tyson got, his feet dipped into the multifamily market. So we're yet to see how that one's going to work out and turn out. But congrats, guys. It's huge. It's amazing. So some of you are investing in your own home area and some of you are investing from afar. So different markets all over the place. Congratulations. We're super excited. Lots going on. So, all right, let me see now. I'm just going to check. Oh, there we go. Oh, you never want to hear your own voice, It's like seeing your own video after. You just never want to hear them. All right. Hey, Andrea. So Andrea Skelly is the one who introduced us to our guests tonight. So our guests are going to talk to us about MFTs. So mutual fund trusts. So we've heard about these, different ways of gathering funds, right? Raising capital. And MFTs, syndications, all these kind of where you bring big amounts of money together were super popular, back a few years ago. But you know what? It gets really expensive to do this kind of setup. But our guests tonight at Axiom, they have brought together an amazing program. When I ran through it with Dwight a few weeks ago now, I was like, I want more. I want to know all the details of it. And you guys know I'm not a detail-oriented person. So you got to know it was pretty neat. They take this thing that used to be super expensive and they make a way for it to be accessible for all of us. Little guys, big guys, doesn't matter now. It's almost like a subsidized rental kind of program that I was super excited about. There's more, so much more that they bring to the table. So what they do is they basically, they specialize in creating tax efficiencies. Okay. This is good. These are good people to know. We all want tax efficiencies, right? Not tax evasions, not tax schemes, not tax shelters, none of that stuff, but efficiencies. We all want efficiencies. So how are you going to use people's RSPs in real estate, this is a beautiful way to be able to do it. Hey, Mark, Tina, Florian, Craig and Lisa, Crossfield, Tina, hey. Think rent to own, Andrea says, yeah, exactly. So welcome, guys. Let us know where you're from, because these guys, I'm going to bring them on right now. Let me just make sure I got through all my stuff. Oh, no, I didn't. Huh, see? Okay. I have notes for a reason. So guys, next week we are announcing our name to our new GPT. So you guys voted, you guys gave us actually some amazing names. So many of them that I really liked. We whittled them down by vote, and now we will be announcing the winner next week, releasing that and another tool for investors that are all AI based and built for the Canadian market with all of Fearless's standards intact. So I'm pretty excited. It's pretty exciting stuff. All right, so I am gonna bring these guys on. There we go. Hey guys, welcome. So this is Dwight and Evan, and you guys are from Axiom Advisors. You guys have been around doing this stuff for a little while, so some people might know you, but why don't you give us a quick little rundown of your background and how you came about?
Well, first of all, you can see that we're not very young anymore. We're on the old side, but we're kind of like the Muppets. There's the characters on the Muppets, those two old guys sitting in the balcony arguing. That's kind of like us. Evan and myself have been business partners probably for 25, 26 years.
Yeah.
So we know each other quite well. Just as a backdrop about us and our company and how we have got to this point. We're both accounting trained background, CPA trained, and when we first got together, we both have some tax background in there, and we started out years and years ago helping private companies actually raise money. We were actually helping them raise money, and that introduced us to how the whole securities world works. And as you know, if you want to raise money, you're going to be governed by the Securities Commission, and you need to know all the rules and regulations. And so what we noticed though, we used to actually help companies that weren't in real estate, but what we noticed is that companies were at a disadvantage. Private companies were at a disadvantage because they couldn't access investors' registered funds. And that really, that's Evan will probably go off and tell you a little bit of how much money is sitting in RSPs and TFSAs. But we really saw a need in the marketplace where could we help private companies, private people access those funds. And so when we say we've got the slogan that basically we create tax efficient structures or entities. And really, what does that mean? It sounds very interesting, but what it really means in most cases is that we have structures that allow a private company access RSP and TFSA or RIFs, as we call registered funds. And so what we felt is, can we bring that to the average business person who isn't a public company, for example? And so,
Like us little guys, right? The
like
mom and
us,
pops of
Exactly.
the
we
world.
kind of put ourselves
Yeah.
on the spot. So, we like to say we took our experience of accounting and tax and securities and we put it in a bowl and we kind of mixed up all those ingredients and we basically have come up with a we our business is we create these structures for you.
Yeah.
And we take the mystery out of it, we take the challenges out of it, and we kind of provide a turnkey solution. And that's kind of critical is that we ensure to ensure certainty, we do the certainty, we do the work, we create it. We don't raise money anymore. We've got too old for that, and but we create these structures, and so
And you're going to
yeah,
show us those structures. You're going to actually show us with some
yeah,
slides. And what
We
I
are.
love, yeah, what I love about the slides is you actually give enough detail for us to understand why it's compliant, but yet we don't have to do the work. And you tell
yeah,
us how you're going to actually put the work in to make sure that all of these parts comply without us having to do it, but yet we get the benefits. It
You know,
was, yeah,
Tiffany, at the end of the
love it.
presentation, you're going to be so excited for what we do. So,
When you did the 40-minute run through, I was like, what?
yeah.
I want to know more. And that, so yeah, for sure.
Yeah.
Looking
And I mean,
forward to it.
so,
And one
you know,
sorry, one question for you,
yeah.
Dwight. Is there anywhere that you can't do? Because we've got everyone from Ontario to New Brunswick to Nova Scotia. We've got Northern BC. We've got Yellowknife. All over the place that are watching. Is there anywhere that you cannot do in Canada?
So there is. We choose not to go into Quebec only because the securities rules and regulations are different in Quebec. And there's no offense to our people, our friends in Quebec, but it just we're not geared up for it to be quite
Yeah,
frank
we
for you.
know
So
for sure.
so we've stepped away from that because it would just be pretty cost prohibitive to try and take our product and make it compliant there. So that's the only province that we don't. And again,
Perfect.
the structure that we promote primarily for the real estate industry is the mutual fund trust, or we call MFT. And without further ado, I'm going to turn it over to Evan, and he's going to walk you through what is a MFT and how it works to some degree, and then he'll turn it back to me.
All right, thank you. So you should all be seeing my screen here with Axiom Advisors. So
You bet.
um, we'll continue on here. Do I give a nice little overview of what we do? And I'm just gonna, I guess, try and add a little bit meat to the bones a little bit. So, the first thing we always get it like, what is an MFT? And, 99% of the people know what an LP GP structure is. And, the easiest way to think about it is think about it as it's an LP GP structure with a few tax benefits to it. And that it operates the same instead of having a general partner, a mutual fund trust has a trustee. Instead of having limited partners, investors, you have unit holders. So it operates pretty well the same, but CRA says there are certain tax advantages to the MFT. So that's what we will explore a little bit more. And so how we're going to do this, we're going to talk about sort of the 6 benefits of an MFT. And by doing that, you'll see actually what an MFT is, why you'd want to use it, and how it works, and what those benefits will end up being. So as Dwight said, the primary reason for using an MFT is that you have access to registered funds. And yes, he is correct. I'm going to give you some numbers. It's the inner accountant in me and who loves some stats. And I'll admit, when I first started investigating this, I was totally blown away because my number was a whole lot smaller than the actual number. And that number is how much do you think that every year Canadians put into their RRSPs? And I'm talking just RRSPs. And I was blown away. I thought it'd be a few $1 billion at the most, like maybe 1 to 2. And it runs over $50 billion every year. So that's 50 billion. That is a staggering amount of money that goes into it. And so, who is putting that money in? Well, it's everyday people. You have a little bit extra money or it comes off on a monthly basis. And so, the big thing about that is when you go to raise money, you go to your friends and family a lot of times, and they don't have the excess money sitting in a savings account. What they do is they put it into their RSP, or if that's full, they'll put it into a TFSA. And so again, that goes to the disadvantage that Dwight was talking about, is that unless you have something like an MFT, you cannot access those registered funds. And so if you're a big public company, you can, or if you're a bank, you can, but the average person, the average company cannot. And so that's the primary reason why you'd want to use an MFT is you can access those billions of funds. And if you add them up, RSPs have been around since 1957. There are trillions of dollars sitting in RSPs in Canada, like trillion with a T. I've gone to Stats Canada. I've added up the numbers, so I'm comfortable in saying this. So that is a huge pot of cash if you're raising money, and especially if you're going to friends and family or what we call eligible investors and accredited investors too. A lot of credit investors will have millions and millions of dollars sitting in their registered funds. This is where you can find a vast majority of your cash. Um, as we'll talk a little bit later, we manage a lot of these structures for the clients that we create for them. And, we typically see 80-90% of the funds that they raise are registered funds. And the companies that generally are lower than that, it's because their investors have maxed out their registered funds and are now investing more just using cash. And so that's weighing down that average. But it just shows you how valuable registered funds are to raising capital. So a little bit about the structure of an MFT. So an MFT it's not a security entity or a structure. It is a tax structure. So CRA governs how an MFT works. And in order to use registered funds in any entity in Canada, they say that entity has to be public for tax purposes. And so they set a standard of 150 investors who each put in at least $500. That's their bottom line. And so whether it's an MFT, it's a different structure. If you're taking a company public, that is the bare minimum, and that's 150 shareholders at $500. So an MFT is not considered an MFT until you have that. And it has to be in a single class of units. So you can't say, well, I'm going to have class A, B, and C, and they're each going to have, 40 investors, and you're going to be over that. No, it's all got to be in a single class of units. And this is the area that most companies or groups who create an MFT will ultimately end up failing in, is that they won't get the 150 shareholders or unit holders. And CRA gives you only a certain amount of time. They give you to March 31st of the following tax year. So if I started an MFT today, being April 14th, I would have till March 31st. So I'd have almost 12 months. If I created it on December 31st, I would have virtually 90 days to come up with that 150 people. So this is where a lot of, and especially real estate. I mean, when you're starting out, you're probably not going to have 150 people investing in a single class. So that's an important one. Oh, went the wrong way here. The benefit number 3 is, and this gets into how an MFT works, and this is really unique to Axiom. Not that anyone else can't do it, but this is one of the things that made our Axiom MFT unique, is that all the MFTs out there, when we look to get in this, basically it's the same way as if you go invest in mutual funds, where a whole bunch of investors put in their money, and then the people who run that mutual fund will go buy a bunch of assets, and the profits and loss are all pooled together, and then it's averaged out, and that's what you get. And that's the way MFTs typically work. It's a pooling of assets, and the investors get whatever that profit and loss is. And for the real estate market, especially the small one, that just doesn't work. You would have to go out and, every time you do a new project, you'd have to start another MFT, or if you have multiple projects going on at the same time, you'd have to have multiple MFTs, have to have 150 people in each. The costs would just be, it was staggering. So what we said was, let's change how an MFT works. And so we rewrote what's called the trust deed, which governs how an MFT works. We took it to one of the brilliant tax minds in Canada and one of the top security lawyers and say, here it is, fix it up, make sure it all works from tax and law point of view. And that's how we came up with our Axiom MFT. And so basically how it works is investors will say, hey, I like what's going on in project, in my example here, project B. And so they're going to buy class B units, and the profits and losses from project C are not shared with B. And likewise, if you invest in class C, it's not shared with project B. And so it's like having multiple MFTs, but only in one structure. You only have to have the 150 people once, and so it's a lot more cost uh, efficient. So this is how a typical setup works then. We bring in our 150, and then you can, start off with class B, or if you have two projects to begin with, class B and C, and so on. And you can keep growing that. There's no limit how many classes you can have, and it goes on and on. So, and unlike like a personal trust, there's no time limit to these. So they will go on for as long as what you want them to. And the nice thing about this is extremely flexible and versatile. So in this example here, I have class C and D that are investing into the same thing. So you may say, hey, we're going to go buy the land first. We're going to do a debt offering for that. And then we're going to come back and we're going to build the actual townhouses, but we want to give off profit participation, based on how much profit as we sell them. And so you do a different offering to the class D investors, but they both invest into the same project. So it's very versatile with that. And just about anything you can come up with, we've probably done it. We're quite involved with helping you structure the deals. And so, we'll help you with what you want to achieve. Maybe I'll pause there and we'll see if there's any questions so far. If not, we can go on then. But if there's any questions to date.
Yeah, you bet. So there's a couple questions. So if there is 150 people that you're providing,
Yes.
what if somebody drops off? I think that's what the question is
Sure.
basically.
Yeah. And that's a great question. So we have had the core of our 150 people have been with us for eight years. We started doing this in 2018, and we have had people that have unfortunately died, or they have to be Canadian residents. Some of them have moved abroad. Various reasons why they drop out, and we will always replace them with another person. We actually bring in 160 people, so you do have a 10 buffer. And the CRA does give you until the end of the year to replace that person. So if you did drop below the 150, it's not a panic today, like, oh no, we're going to be deregistered by CRA. You do have until the end of the tax year, which is always December 31st, to find another person. But we monitor that because we use those same people over and over and over again. And so if someone drops out, we obviously know about it, and so we'll replace them with someone else.
Okay. So that kind of ties into the next question too, then a little bit is that because it's cost prohibitive to have all these MFTs going, so you're using the same people across different MFTs?
Correct. Yeah.
Okay. And can you talk a little more about the cost prohibitiveness of the MFT and why your structure takes that part out?
Yeah, I mean, a typical MFT, at one point you could probably get an MFT, and this is probably 15 years ago, for 30, 40,000. And now I think I mean, we've heard people are paying $500,000 for an MFT. That's just one single one. I think your standard lawyer, you're probably still talking 60, 80, $90,000. And then you have to go find the 150 people. And believe me, that is really hard. We get calls every year, as March 31st approaches, saying, hey, we've only got 120, or we've only got 30 people, can you help us? So it's that is a lot of time and effort. And so it's not only the cost of bringing them in, it's the cost of your time trying to find these 150 people to come in.
Yeah, before your project starts or before the end of the year
Yeah.
and CRA comes in or any of that stuff.
Yeah.
Yeah.
And I'll just mention one other little thing that kind of it flies a little bit under the radar, but as much as the security laws in Canada are similar, they're actually quite a bit different from province to province. And so one of the things that is advantage is all of our 150 unit holders are from British Columbia. And the reason we do that is when we bring them in, we're fully securities compliant. We use an EMD, we have an offering memorandum, we have the proper paperwork. So we make sure that everything is done right. But one of the things when you issue an offering memorandum for anything, whether it's an MFT or any other company, there's something called the continuous disclosure requirement. And the securities commissions in all provinces except for British Columbia require that once you have an offering memorandum, you have to have an IFRS standard audit every year thereafter, forever. As
That
long as
sounds
this,
terrible. I don't know what that
I
is, but
know
that sounds terrible.
it, it is. So,
Believe it.
yeah. So if all the 150 people come from British Columbia, you don't have that audit requirement. So all of ours are from British Columbia, not just because that's where Dwight and I are based, but that's because they have the most friendly security
Oh,
rules. So that's
beautiful.
also a little thing to note too.
Things that we wouldn't necessarily know. Now, if I'm in
Right.
Alberta and I'm going like well, maybe I can get 150 people. Well, now it's actually best if you get them all in one province. Well, okay, now there's another loophole to jump through, right? So,
Yeah. Yes.
one last question before you do move on.
Okay.
Is there an age restriction? I'll be retiring in 5 years. Not me, but
Yeah, no, no, there isn't. Even someone as old as Dwight can invest. So yeah, no, you have to be 18 years or older. So and we have all of our 150 people are Canadian residents. You have to have majority of them have to be Canadian residents. So you can have non-Canadians in there. But the majority of them have to be Canadian. So all of ours are 18 and above in Canadian. So the 150, all qualify.
perfect. Yeah, huge. That's just huge work on our side. That's just literally taken off
Yeah,
of our plates. Never mind the learning and understanding, compliance and education and all that kind of stuff. So yeah, fantastic, fantastic. And I think that's it for
yeah.
the questions right now.
Okay.
Okay.
I'll go to the next slide. And then Dwight, do you want to
Can you
talk
go
for a bit?
back,
Sure.
Evan? I just want to bring out a couple other points on the structure, the typical structure setup. Just
Yeah.
backing up, yeah. So just a couple other things. Evan pointed out on the slide that we just left that the MFT that we create is very flexible and efficient. Now, I just want to tell you a couple other flexible items. So you can see that at the bottom of this chart where you're raising money in Class B, for example, for this project, that project could be a townhouse, it could be a house, it could be a walk-up, whatever, right? What I want to emphasize is that project doesn't have to be in Canada. So yeah, so you can be raising money from investors at the top of the screen using their RRSPs, TFSAs, and you using and deploying that money in Costa Rica, Tokyo, Las Vegas. There's no restrictions into where that money can be actually worked. So that's an
Interesting.
advantage. There's other structures out there. Maybe a lot of the audience has heard of what a REIT is or a MIC is, but they are restricted to what they can invest in terms of Canadian content.
Hmm.
Um, we always point out that project could be a company. It doesn't have to be real estate. It could be, we have a client who has real estate projects, but he also has a spa manufacturing company that has investors involved. So, whether you'd want to do that in an MFT, you have to look at it. But that's the flexibility of the structure. It's very flexible. It can be used for a lot of things. The other thing I like to point out, and I'll just touch on this, is you see over to the left that general partner at the bottom. So you have a general partner for project 2 and a different general partner for project 3. And I only say this, it allows you then to get into joint ventures with people. So you could do a joint venture with someone. So you could go to Tiffany and say, Tiffany, if you throw in your land in project 2, I'll raise the money through my investors and I'll split the profits 30-70 with you. Then you could also go to Evan for project 3 and say, Evan, you throw in your land into project 3 and I'll share 50-50 with you. So it gives you the ability to do something like joint ventures as well and be very unique and separate for that. So I just wanted to, when we say this MFT structure is not only efficient for raising capital, but it's also very, very flexible for how you structure your transactions and where you do them. Okay.
Yeah, fantastic. Awesome. Thank you.
Tax efficient. What that means is that the nature of the profits that you earn down at the condo development flow through. So the tax character, we say the tax characterization stays the same. So if the condo has a capital gain, that you can flow a capital gain up to an investor. If it's interest income, then the interest can flow up, or dividend income, it can flow up. And that's really only relevant if your investors are non-registered, because as we all know, if what you earn in your RSP or TFSA isn't taxed until anyway until you draw it out. So, but if you have that investor is, as we would say, a cash investor, he would rather get a capital gain or a dividend over interest income. So you can play with that how you pay your investors back. Okay. Next slide. We also just want to, this sometimes is overbearing in terms of the administration. So we also like to let everybody know that our company Axiom provides two services. One is that we create this structure for you, turnkey, but we also come in and manage them on a day-to-day basis afterwards. And you can kind of see on the slide, there's about 3/4 of the way down, there's a MFT level and project level. We only manage from the MFT level up. So for example, we would manage all onboarding of your investors, getting their RSPs into your projects. We would do all their tax slips. We would file all the tax returns for your entities. We do all the investor payments on a monthly, quarterly, yearly basis, distributions. And we also have portals that we supply your investors with information about their investment. We don't go and manage the project at the project level. In other words, we're not paying the general contractors or the electricians, that type of thing of your project. So, but we do offer that service just because we found developers who say, I don't have the administrative staff to do it, A, or B, my administrative staff don't want to deal with investors. and and so we do provide that service. So as Evan said earlier, a fair number of MFTs that we've actually sold to people request us to manage on a day-to-day basis. Okay, next slide. And then this is just going to give you a glimpse of if we are managing, this is what a typical investor would be able to see through our portal, giving them an overview of their investments and how much they've earned. It's comprehensive. Just that's view one. I like numbers. Some people like graphs. My wife she would understand this slide better than the previous one. I would understand the previous one better than this one. But we also do the graphs to show the visual of John Smith's investment. And I think there's one more. Yeah. So,
Nope.
we think this is a benefit. When people come to us, we have a little internal saying that we would say, you go raise the money, you being the client, Tiffany, you go raise the money and you run a really good project. You leave everything else to us. We'll do the legal, the auditors, the tax opinions, work with Olympia Trust, the trust company, all of these other things. We're the point of contact. So we take all that kind of like away from you so that you can just focus on running your project and bringing and work.
It's huge. Like this is a full-time job for an investor to be doing all that stuff. Never mind, again, the learning and the compliance and the missing of making sure you hit all the deadlines and like all of that. This is huge. This isn't just like, oh yeah, we do. Like you guys are like, yeah, we do all this for you and we do all that for you. from somebody who doesn't do this every day, all day, like you do, apparently, this is a big, huge bonus. Never mind the tax savings, never mind the
Yeah.
structuring, never mind all the other stuff that you bring. Just this
Yeah.
alone is massive.
Yeah.
Yeah, I'll give you an example. It's current for us here, so it's a little bit painful, but we had a company that didn't hire us, uh, and they missed filing some security forms that they should have, and then they came back to us.
Mhm.
Their lawyer didn't realize they had to be filed, and they have an $18,000 bill now to pay. That would have been
That's the
zero.
penalty.
That's just the
Yeah.
penalty.
Yeah.
Yeah.
$18,000. You know, we
Yeah.
tried appealing it and stuff, but yeah, and you know what? Yeah.
If
You
only,
know,
hey?
Yeah.
if only. It's a complex intersection of legal, you know, accounting, tax, securities, but they all have to be handled. So yeah.
Well, and just in your guys's praise, just from comments that are coming in. So I guess you're working with Shelly Benice, and she's saying that, you guys are great to work with. Absolutely make everything so easy. And that's from someone who's working with you now. So that's fantastic. Crystal Crom, she's in Central Alberta. She's, brilliant idea, but great service as well. Andrea Skelly, who you've spoken to before,
Mhm.
like how easy you guys make everything. So, I mean, a referral is the greatest compliment that you can get. I feel like you've got lots
Yeah.
of referrals even just within the group that's watching right now.
Yeah.
So,
Yeah.
yeah,
It's
what else you got for us?
Well, a little bit more, but I will say, we're good at what we do, first of all, and we're I think we come along as a partner, not as a supplier. We refer to it as that we're a bit deal junkie kind of guys. So we really get involved with everybody. But yeah, well, it's nice to hear that. We're the only company in Canada that we've come across that will create a turnkey product, like MFT.
yeah.
So, um,
Amazing.
yeah,
Yeah.
that,
Yeah.
that means I can't retire next year, is what Evan
That's
keeps
right.
telling me.
What would
So,
you do with
I'm gonna
yourself
run,
if you retired? Come on.
yeah, gonna run you quickly through how the process of setting up an MFT looks like, how long it takes, and then we'll walk you through the costs on the next slide and some alternatives to that. So Tiffany, if you were to say to us, "Hey, I'd like to set up an MFT," you can see under the initial step, we would come in, we would set up the MFT, we would uh, get an audit, do an OM, onboard 160 people, and that takes us 3 weeks. So in 3 weeks, we would have your MFT set up. And at that point in time, you would be able to, your MFT could actually take in money from investors non-registered. Okay. So someone said, I want to use my RSP, you couldn't take that in yet. To get to that point requires the next steps as you see in 4 on. So the next step would be that we would go get your MFT a tax opinion, which is required, and we use a predominant tax firm called Fleske Flynn, and we would get that within a week for your tax opinion. Again, the client doesn't have to worry about where to get that and to get it. Then in addition to that, when your investors are using their RSP or TFSAs, they're really using what's called a self-directed RSP or a self-directed TFSA. And only certain trust companies in Canada allow that to be used for private investments. Those, and maybe your crew have heard of this, Olympia Trust is a big one. There's Odyssey Trust and Western Pacific. Axiom deals with all three of them, and we would then go set up the MFT in one of those trust companies that you choose you would like to deal with. We work with all of them, and that we allow a couple weeks. And if it's Olympia Trust, it might actually be 3 weeks because
Yeah.
they just take longer. But once you have the trust company approval, you're ready to start taking in registered funds from investors. So we say that from start to finish, you can kind of think that I'd be in a position to take in registered funds a couple of months, 8 weeks. And you could take in that earlier. Now, the second part for each offering is that when you go to the public to raise money, you have to provide information to that investor. What are they investing in? And you do that through what's either a term sheet, and a term sheet is basically just setting out the what you're offering that investor. Are you going to pay them 12% interest only? Are they going to pay them no interest and they're going to get a percentage of the profit? It sets out the terms and conditions. And when you have a term sheet, then that's the informational piece, but then it is also restricts who you can bring in as an investor. Because now through a term sheet, you'd be able to go get investors that are either accredited investors or friends and family of you or close business associates. Those are the restrictions as it relates to a term sheet. If you do an offering memorandum, which is a far more comprehensive document, so we like to say a term sheet is 9 to 11 pages, and an offering memorandum is probably 90 pages. It's just a way more comprehensive and obviously way more expensive. But it allows you to then go and access what we would say is a retail investor. And and the securities term is eligible investor, but it's a person whose net worth isn't as high as an accredited investor. And every province has definitions of what an eligible investor is. And so if you're looking for people who are going to invest like $10,000, then you may end up going and offering memorandum, or you don't know your investors. And if you don't know your investors, then that kind of kicks into the last part of the chart, which is an EMD. And you can see beside the EMD, we say recommend. So Axiom recommends that you would consider using an EMD. An EMD stands for an exempt market dealer. And they are people who actually vet your investors. So, if you went and said to someone says, I'd like to invest in your project, they may not be eligible. They may not qualify for that. And an EMD would vet them. They would look at suitability, concentration. You know, I always like to say, if you went out for coffee, you sit down at Tim Hortons, you sit beside a person, lady, she's 93, and she says, I really want to invest my life savings of $8 million in your project. That would probably be the happiest day of your life. But from a securities point of view, the securities people would say you cannot take that lady's money. She's not suitable. She's not going to be around to get the profit, whatever. So an EMD basically vets that for you. And typically we kind of, practically we say, if you're just coming out with a term sheet and most of your investors, then that's the way to go. It's far less costly. And eventually we find that, on your second project or third project, you may want to go and do an offering memorandum, raise more from the public. But you walk before you run before you sprint. So that's kind of, but we do recommend it. And it's an insurance policy that if the security regulator comes knocking on the door, they talk to the EMD, not to you, because they're responsible for that. Yeah. Okay. And we'll just give you an
Next slide.
idea. Pardon me?
Next
Yeah,
slide.
Papa, we'll give you an idea. They're not, you're going to pop up the cost of it. So basically there's three kind of areas for the cost. So the first one, as you can see, it's expensive. Like Axiom, we charge $100,000 overall. And however, to try and ease that, we charge basically $25,000 to start. And then we get paid the last $75,000 on your first raise. So when so basically you're using your investors' money at that point in time as opposed to your own money. The $25,000 up front, basically, to be frank with you, just covers our costs to set up because we are paying for the audit, we're paying for the offering memorandum, legal, and what have you. So that's the first cost. The second cost is how much the tax opinion is a fixed cost. They charge $7,500. Olympia Trust charges $1,500 as a setup fee. And then we bring in 160 people and they stay in your MFT for life. Because as Evan said earlier, the MFT is a CRA structure that requires continuously that you have 150 investors in one class or more. So our investors come in and stay in your MFT for life. To do that, we pay them upfront a $100 bonus to do that. So 160 of them come in, that's the $16,000. In addition to that, they get a little bonus at the end of each year, and that's down at the bottom where you see that $4,800 a year. So our investors get 6% on the $500 that they've put in, which is $30 times 160 people is $4,800. So for them to stay in forever, you're paying them an additional $4,800 a year. So the other expenses that you should budget for is, and we don't control this per se, is if you come out with an offering memorandum, that's a very big cost, and that's a securities lawyer. We say you got to budget somewhere between 30 and 90. We've seen where lawyers have charged in excess of $100,000 for an offering memorandum, and that's why we suggest you go the term sheet. And if a term sheet you can get done for 10 to 40,000. I think 40 is on the high side. And Axiom is prepared. Like if it's not a complicated transaction, we would come in and help you with a term sheet, and we would charge $10,000 for that, for example. So, but it is a cost that you have to think in terms of like, what are my overall costs? And then we've got here just just to tell you that you don't have to close all your investors at the same time. You can, every 2 weeks you can close as many investors that are ready to fund you, and there is a closing cost just to do all the registration. And then lastly at the bottom, just what the EMD might charge. And typically you should budget for a due diligence fee, $7,500 to $10,000. We put 20. We know one group, and then they typically take a percentage of what you raise, anywhere from 0.75 to 1.5. So that gives you a picture of the overall cost. So again, it's expensive. We realize that, but from our point of view, we Axiom only ask for 25,000 up front, and then we wait basically till your investor base. So that is a very high level snapshot of what you can, we say you should budget for the 100, the 25, and if you went the term sheet, that's 135. So you're looking at between 135 and 150. I would think that's a fair range. Hey, Evan?
Mm-hmm. Yeah. Yeah.
Now, so, this structure is if you're going to raise 300,000, 400, 500,000, this structure doesn't financially make any sense. So we get that. So we've partnered up with an MFT that we created, and we have a program, and I'll just say it this way: you can rent a silo. So if you remember when Evan at the typical structure, typical structure. And if you remember, because the silos are independent of each other, so you could have the rights to Class B silo, and Evan could have the right to Class C silo, and you could run different projects, but because economically you can't cross over in our MFT. So we do have a program that for, if you're raising lower amounts, you could own a silo, if I can put that, and do a project just in the silo. So you don't own the MFT, you're not committed to running the MFT, you're just committed to doing your one project. And it's significantly less money, basically.
Yeah.
Significantly less. So it's just designed to allow, so we're here saying not everybody out of the gate wants to take the risk of financial commitment to that MFT cost, but they might say, I'll take the risk onto the solid, and I'll do another silo. Maybe I'll buy an MFT later on my own. And if you do, then we'll give you credit for what you've paid for us on the silos towards that. So we realize that you don't have to go from doing, say, a house renovation, to, oh, I've got to do a 50-unit apartment block to be able to use this. So it does allow that gap that you can still get, because the key point is you can now get access to registered funds from your investors. And that's about it. So we'll take any questions if you have.
That's it. Just that level of detail. That's all you got.
That's it.
Yeah.
No more.
No, that was awesome. That was awesome, you guys. And are there questions? Yes, they are rolling in the door. So we will not be able to hit all of them right now, but we will. You guys are joining us for our Ignited Laser session, which comes up right at 6 o'clock. Or 6 o'clock my time. So we will hit some of those in there. But let's see okay. First off, what's your website or your contact information? It is already in the chat, but for those that are just listening,
He'll pop it up. There was one more slide.
Yeah.
Oh, was it? Oh, perfect. There we go. So we got it. The girls put it in the chat for everyone, but for those that are just
okay,
or want to just take a quick peek at it.
There, if you want to take a screenshot of that or photograph of that.
There we go.
So
there we go.
Yeah.
So the website is axiomadvisors.ca. And then your email addresses and phone numbers for everyone. That's
just our first names here. So yeah.
Yeah, perfect. Awesome. Okay, so yeah, I mean, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 more questions that came in. Okay. So now I got to figure out which one we want to hit in the next 4 minutes. So I'm gonna say, let me see. The Security Commission stuff, the SEC stuff, we're going to talk about in laser, I think. The EMD, yeah. So let's talk about that. So the EMD, how do they work? What are their costs? How does that kind of go?
Go ahead.
Yeah, so we work with a couple different EMDs, so we'll introduce you and then you can pick who you want. But they will function on 2 different levels. One is you say, I've got a friend here or someone I know, Bob Smith, and he wants to put in money, and they will go vet him. They'll make sure it's a suitable investment for him. If he says he's accredited, they'll ensure that he is accredited to come in. Or for friends and family, they'll make sure, like, if he's coming in as a friend, that he in fact is a friend. And they'll generally only charge you, 0.75 to 1% of the capital. So it's, as Dwight says, it's cheap. It's a great insurance policy. You can also go ask them to raise you capital. They don't do a lot of that. I'll be honest, because they see a whole lot of deals and stuff. So sometimes they will. Our experience is they won't raise you a lot. So you basically have to find your own sources of capital, but they will vet those people coming in for you. The Security Commission loves it then, because, and you will love it, because if something goes wrong with that investor coming in, as far as them not being accredited or a friend, it's the EMD that has to answer to the Security Commission, not you. So
yeah, that's huge. Just that little piece alone. So 0.75 to 1% of the full raise that you do, or the raise that you do with them?
Of that investor coming in. So if the investor's going to put in 100,000, then it's like 1% of that. Yeah.
Perfect. Okay. Any other questions that we want to hit for sure here? Like, there's quite a few from Ignited members, and so they're going to get it in the next session. Let me just see here. Okay, you guys got all this. Thank you so much for the information, Janie says. Okay, so website contact, project size. Let's talk about a project size minimum. Now, I know that you touched on it. Now, that was in the normal EFT, so MFT, sorry. That was in the normal one. then there's that kind of rent to own kind of flex option one that you have. Those would be different numbers. Do you have kind of a minimum project base that makes sense for most for both of those?
Yeah, we say, we'll give you rule of thumbs. If you're going to rent a silo, I think you're probably in the 400 to 700 range.
Yeah.
That's how much you want to reach, 400 to 700. Then the cost will make sense. If you're going to buy an MFT, you probably want to be in the $2 million range. But remember, you own the MFT for life. So you might do a project and raise $1 million and then turn around and do another project and raise $1 million. Well, that's 2 million. So and you own it for life. So if you can see yourself using it where over time you're going to have raised more than $2 million, might be from same investors, then it makes sense. But if you're only going to, if you're going to be under that, then you saw the cost. It's getting pretty hefty up there in our opinion. So
Yeah.
that's
Yeah,
kind of some rule of thumbs.
Yeah, anything under sort of 2 or under 1.5, rent it,
Go to the silo,
unless,
rent it,
again, unless you've got the multiple projects, as Dwight said. Yeah.
Yeah. And then if you want to jump into an MFT, few silos down the road, we'll give you credit on that towards the purchase price.
Yeah.
Yeah, that too. Like you guys are so like you're just trying to make it easy. Like you've obviously worked with people long enough that you see where people hit the bumps in the road and you go, well, if we just took that out, they'd be able to continue in a safe, smart way.
Right.
Yeah, it's awesome. It's awesome. Okay, we're gonna save the silo conversation. We're gonna save the SEC conversation. We're gonna save the legal entity conversation. Let me see. I think there's one more that I'm missing right here. Oh, maybe not. No, I think I got it. We got it. Okay. I think we got it. You guys did awesome. Like, look at that. You're like 2 minutes away from an hour.
Do we get a brownie?
You get a badge today. Yeah.
Okay.
And a stamp on your hand.
There you go.
No, you guys were just awesome. So thank you so much for that. We're going to stop the live recording that is going into Fearless right now. So it's just going to take us a minute. And then if you can just hang tight with us for a second, everyone's saying thank you so much all over the place. You guys can go back in and watch yourselves if you want. I hate doing that, but brownie points all around, they're saying. So but yeah, we're gonna
thanks for having us.
Here.
We appreciate the opportunity.
So much.
Yeah, we appreciate the opportunity to share, and we view it as an educational side. So we appreciate it.
Yeah. Awesome. All right. Cheers, everyone. Next week, we're going to announce our chat GPT that we're releasing. The name of it will release the GPT and another tool as well for investors, AI-based stuff only. So don't miss next week's Tactical Tuesday, guys. And cheers, everyone. Stay warm. Stay healthy.
Bye for now.
All right.